Hey everyone, it's Rob here. Welcome back to my YouTube channel. If you haven't already subscribed, definitely do. Now, a couple of people have reached out to me and asked me to make a video on 15-minute entries. So I threw a poll out in my Telegram group asking people if they wanted to see a video like this. And for the most part, people wanted to know how to enter on a 15-minute. The concept's exactly the same. You just gotta have higher time frame narrative behind it. So I'm going to show two different examples on two different pairs. You won't get as good of risk reward as you would on the 1 minute, obviously, but it's also a lot more stress free, and your hit rate's going to be a lot higher, which will ultimately build confidence. So here we have GBPUSD, and if we just look at the daily quickly, we are clearly bearish. We're making new lows. Now, something I want you to make note of here right off the bat is we have relatively equal lows. We are bearish on the daily. We also have a low that failed to run a high, which means this low is really weak. At this point, we have another low that's currently trying to run up, and our expectation is ultimately for these lows to fail as they're weak, they're equal, daily is bearish, and for the most part we expect order flow to continue on down until it doesn't. So if we just go down to the 4 hour here, you can obviously see the equal lows on the 4 hour. Now, the zones we react to are always flip zones. So you have a demand zone here. You have a reaction point here. We have this candle here would be my supply zone on the 4 hour because it took out the reaction point. Option 2 is always the extreme, which is, it does happen. A lot of time, most of the time, I'd say 3 out of 5 times it'll go with what took out the reaction point, and 2 out of 5 times it'll go to the extreme. Either one's fine. What we look for basically is mark out both areas and we trade the reaction. So if we just go to the 15-minute time frame here, we can see we're taking another run to this supply here. This is our 4 hour zone. So ultimately, what we're looking for here is something that's gonna show us that there's willingness to go down. So we know 4 hour and daily is bearish overall, and we are expecting the equal lows to go. That's a higher time frame narrative. Now we need the 15-minute to ultimately line up with that narrative. So what we're looking for here is a change of character. Ultimately, I'm looking for this low here to fail, which I believe, yeah, it has. Perfect. So we have a sweep of the highs here, which is our chalk top, and we have a sweep of the lows here, which is our chalk bottom. Now with this particular pair, it really likes the extremes. All the pound pairs seem to really like the extremes, so more often than not, GU will come back to the origin of the chalk. A lot of the entries too, if you have multiple areas, GU seems to really like that extreme. It's a very aggressive pair. Now, as we're looking at price action develop here, a lot of people are probably, jumping unnecessarily in here and wherever, whereas all I'm looking at is the stacked liquidity we have here that we need to run. We're stacking liquidity here, we have liquidity here, and ultimately all these areas generally get run. We don't know when, but more often than not they will get run. Now, this isn't like the cleanest POI, but myself, I pull ranges. So you probably have something like that. A little bit of a large zone, but it's not bad for GU. So again, you're building all this liquidity, and you ultimately tapped into your order block here. Now keep in mind, with the 15-minute, you will miss trades. There's just no way around it. Whether you want to take the whole order block or half the order block, that's up to you. If you take the whole order block, more often than not, you'll get tagged in the trade and you'll get the trade to go. With a pair like GU, I would have no problems taking a 14 pip stop, as it's really not that bad with this pair. Now, when you have a pair like EURUSD, you can start dialing in and maybe only taking 3/4 of the order block, or you could start looking inside the 15 POI for a refined POI, or you could straight up go with just half the order block or 3/4. You will miss trades, but you'll get better R's when you do hit them. This is something I've learned the hard way with gold, because I've always been trying to run these really tight stops on gold, and I find myself missing probably over half the trades, not getting tagged, and it runs to target. So I started taking little bigger stops on gold, like 15 pips, 20 pips even. Well, not 20 often, but 15. Before I was trying to get in with 5, 6, 7, 8, 10 pips, and I was missing a lot of trades. But what you're gonna find with an aggressive pair, that 14 pips is really not that bad. Just looking at this here with the higher time frame intentions in mind, I would really have zero issues holding this into the 4-hour lows. You could even hold it past the 4-hour lows quite a bit. So the first point of I'd even think about taking profit if I was taking this on the 15 would be down here, which is a 10R, which is a great trade. Some people might want to take profit here. You really don't need to. Like, this is a higher time frame move. Usually equals get swept if it's with daily order flow, but I'd have no problems just holding this. Obviously break even sooner than later. GU is a pretty aggressive pair, so it should really have no need to return. I guess there's really no build up there with the 4-hour, but yeah, that's kind of how I'd frame up this trade, just looking at the higher time frame order flow. Now, we could do one more example on EU as well. It's actually from today. It lined up quite perfect, but you need that higher time frame narrative from the daily and the 4-hour. Just think of swing traders. They use the weekly, daily, and the 4-hour, and they enter on the 15. The concept's the exact same on the 15. And yeah, that's a 10R, pretty stress-free trade. You don't have to worry about getting taken out with a 14 pip stop, whereas a lot of times with 2 pip stop or whatever, you'll get you get taken out once or twice before it goes. So here we have EURUSD. If we just quickly look at the daily, so this already shows us what happens. Don't worry about that. The important thing to note is that daily is bullish, 4-hour is bullish. So ultimately, our expectation is to continue on bullish. As long as this low stays intact, we stay bullish. Now let's look at the way this range formed. You again have your last form of supply. You don't really have a reaction point here, as it just kind of came through it in one go. Your 4-hour demand zone would be this. Now I want you to make note of the way this stacked. So you have inducement here, which is great for a POI holding. We made new structure as we took these highs, created a new high, and ultimately we dropped a bunch of liquidity here in the form of equal lows. Now on the flip side of things, we have a bunch of liquidity here in the form of equal highs. So here we're kind of building. More often than not, expectational order flow will play out, and we do better going with higher time frame trend. So right now we are confirmed bullish on the 4-hour, unconfirmed bullish on the daily, which I believe it did close bullish after this trade. So right now what we're looking at is this is our flip zone. We had our sweep of the lows, sweep of the highs. So this is our 4-hour change of character and flip zone. I do not expect this zone to fail. It's a pretty strong zone. It gave us new structure to the upside. So if we just go to the 15-minute, now we're looking at this again, and what you could see here is we swept all the lows once again. Liquidation happened. So now that liquidation happened, we're looking for something that's telling us that price is willing to go up. And as of right now, we don't have that. So here we get this wick here. So to me, we swept the lows, we swept the highs. That is a complete change of character. Like all of these, this range has been completely wiped. We've also tapped into external range liquidity. And for anyone that's familiar with liquidity, we know that external range liquidity usually after the external range liquidity is wiped, we get a way stronger move. So again, we have chalk bottom, we have chalk top. I do not need candle bodies for a chalk. To me, supply is being disrespected. Price is showing that it could possibly be reaching. So when I say external range liquidity, the simplest way of thinking about it is if this is our range, we filled the liquidity void, we stacked a bunch more liquidity, we tapped into it. This is kind of the extreme. So this is what people are referring to when they say trade the edges. You're actually tapping into the external range liquidity. No different than here. You filled the liquidity void, you chalk, and then you come back and mitigate the area that chalked, and ultimately price just melts because we tapped into external range liquidity. So anytime you're trading from the edges, you can expect a bigger move. Anytime you're trading from the middle, you generally become liquidity. So you got to know the difference. There's nothing wrong with just waiting. If you're going to be trading just the 15 or the 5 or the higher time frames, you'll also have the ability to look at more pairs. Like I enter on the 1 minute and the seconds mostly, sometimes on the 5 or the 15, but I have the ability to look at 3 pairs. If I traded on entered on the 15 minute, I could probably look at 5 pairs, no problem, as the market doesn't print that many 15-minute candles in a New York session for me. So just looking at it here, we had a sweep of the lows, sweep of the highs. And because this is euro, you could again say you'll take the whole order block, which is quite atrocious for euro. 7 pips, not bad. You could even say you'll take half. This is totally up to you how you want to do this. 8 pips is not bad. Euro is a slower moving pair, so I'd maybe look at 3/4 of it, or you could even go down to the 5 minute and refine it. And ultimately, you could say this is your 5 minute refinement. Could look something like this, where I would likely take the top of this candle, the bottom of these wicks. You could even say you don't want to miss the move. Something like that. I don't know if I'd take that whole 5 minute candle if I was trying to cut it down. What I will say though is always cover the lows. Let's say we take 3/4 of that. So that's, let's see, so we're 4.6, give it some room to breathe, 5 pips. Now, 5 pips may seem like large for euro, it really isn't. If we look at the higher time frame intentions here, we have quite a ways to go if we're targeting these highs. So now I assume we're going to run all these equals, so you could pretty much hold right into here. And this is just off the 5 minute. Say you don't want to take the 5 minute and you just want it to take, 3/4 of the 15 minute or even the whole 15 minute order block. It's still good R. It's totally up to you how you do this. So you're still in the trade, and this is why I say always cover these lows. more often than not, these wicks do get tested, and there's nothing worse than being taken out of a trade and it goes to target. I had Euro do that to me on the 1 minute where I broke even too quick the other day, and then it ran 10 or 12 R without me. So this right here would be a 16.4 R with the 5 minute refinement. Let's say you don't take the 5 minute refinement and you just decided to take, well, we could probably leave that the same, just below the wicks, but let's say you took the whole 15 order block with an 8.2 pips stop. That's still a 9.6 R. You could even, safely just say it's bullish, I'll hold it to 10 R. Or you could refine it and say I'll take half the 15, which is an 18 R, or 3/4. What I will say about taking half and 3/4 is there will be some trades that go without you. Sometimes it literally just taps the OB. So that's totally up to you how you want to do it. As long as the narrative is coming from the 4 hour and the daily, entering on the 15 minutes, no different. But for those of you that are unable to be at the charts, you can ultimately find areas like this and just set a limit on them and leave it. And no, you're not going to hit off every one, but if you hit off a couple of these a week, you're doing pretty good. There's nothing wrong with a 10R, 9R, 8R. I know everybody's set on these 20, 30, 40R trades, but hitting off a couple of these a week on a funded account will get you there too. So yeah, we'll cut this video here. If you guys enjoyed this video, definitely subscribe. I'll be making more of these later on, and I might even do a trade recap or two later on this week. Hope everyone has a good day.